Well, another quarter of strong earnings for ICICI Securities. Well, it seems like the entire work from home scenario and also the rising retail participation in the equity markets is boding down really well for the company. Well, on a consolidated basis, as far as revenue is concerned, they witnessed a solid growth of about 41.3% on a YOY basis, mainly driven by the strong performance in their core equity business. Well, the revenues from the equity and allied business was up by about 62% on a YOY basis, indicating the kind of strong retail participation that the markets and the company is seeing. Well, this also translated into strong profitability growth of about 70% to nearly 193 crore rupees for this quarter. Well, as far as the customer base and customer acquisition is concerned, the company's total client base stood at 4.9 million customers, out of which 80,000 clients were added during this quarter. In terms of active clients, almost more than 1.5 million of the customers are pretty much active. And the company did also added that customer acquisition, particularly witnessed in the month of June, surpassed the average acquisition in the last 1 year. The company has totally transition to a digital model. Well, as far as their equity market share is concerned, it witnessed an uptick of about 260 basis points to nearly 10.7%, and the average daily turnover increased by almost 115% in Q1 versus 62%. So definitely the equity market share that the company is seeing is on a gaining trajectory, and the similar picture was in the derivative market share, which was up by about 150 basis points to nearly 8.9%. Well, on the flip side, the company witnessed some degrowth as far as the distribution business is concerned. Well, the revenues from this segment was down by about 19% on a YOY basis. The mutual fund distribution revenue declined by over 12% on a YOY basis, and the insurance distribution revenue was down by 36% on a YOY basis, indicating the outflow of funds from within the mutual fund industry. Also, the company additionally mentioned that they are witnessing redemption pressures, which was the reason why the mutual fund industry witnessed a degrowth during this quarter. Well, we did speak to the management of ICICI Securities. Vijay Chandok, in his interaction with ET Now, mentioned that the company is additionally moving to an open architecture model from Q4, from that started from Q4 and is continuing well, and this has particularly resulted well as far as the revenue and profitability growth is concerned. He added that non-ICICI bank customers can now open new accounts with the company, and this has led to diversification as far as their sourcing channel mix is concerned. Well, the reliance on the ICICI bank customers has reduced from 80% to 65% in this quarter. Additionally, he did speak about a combination of factors that are actually leading to such high growth or high momentum. Well, one of them being the fact that investors can now easily enter the markets digitally, and the entire work from home scenario is helping them, given they have more time in their hands. Also, the company said that the availability of financial resources, as given the fact that discretionary spends have been curtailed due to lockdown, and also uncertainty in the markets and the entire economy is driving customers and investors towards saving and investing. Well, having said that, for going forward, the company says that they may see some amount of moderation as far as this momentum is concerned, and new normal would definitely be slightly better than what the current levels are. So going forward, they expect some amount of moderation, but the business would definitely see a good growth.